James, with Credit Suisse, with all of your resources this morning, are we finally at a point of true contagion?
I think within emerging markets, we're seeing that. I mean, on our risk appetite index, we're in a panic. I mean, this is an emerging
How do you define
contagion.
panic? That's a dangerous word.
Yeah, well, we measure it as
your compliance officer just turned white as shit.
No. This index is 20 years old. It basically measures the relative performance in risk-adjusted terms. So when you see the most volatile assets in the world strongly underperforming the basically least volatile assets, that's what can get you into a panic. We were in panic in early 2016.
Right.
So we're there again, but this time it's really very emerging market centric.
Carmen Reinhardt, Ken Rogoff wrote for Project Syndicate a week ago or so, I can't remember, and there's that famous phrase, this time is different. What's different this time is a U.S. that's acting in a completely different way, whatever the country is and whatever the tone is. How does that political Trumpian tone change your economics and your international dynamics?
It means the abandonment of certain policy orthodoxies has occurred, not just in emerging markets, in developed markets as well. And it means attacks on central bank independence, fiscal profligacy, talking about tariffs. I mean, things that may work from time to time, but which run across a whole bunch of countries is quite a shift.
To this word orthodox, folks, which is used in economics in a very important way. Ambrose Evans Pritchard in the Telegraph the other day began his first paragraph with Rudy Dornbush 101. He called it Lex Dornbush, which is there are rules of the road when you get to this contagion. We're not doing Rudy Dornbush's model, are we?
No, I mean, Turkish inflation rose very sharply recently, or has been. The market expected a 100 basis point hike by their central bank. They didn't hike. It looks politicized. And Rudy Dornbush 101 says real rates in Turkey are plummeting. And so, you worry about capital flows, you worry about international investors. There's a lot of foreign currency debt. And so basically 101 says, well, now you have to be very aggressive and tighten monetary and perhaps fiscal policy in response to this. And this is a preview of what can happen really anywhere where you see twin deficits becoming a problem.